Yo, what's going on, guys? We're actually going over a couple dividend stocks that you should buy and never sell. They're super safe because I've carefully selected these so they have more than enough room to cover their dividend. And we're going to see, are they diluting you as the shareholder? So a lot of these are buying back their own stock. So not only are you getting returns through share buybacks, but you're getting returns through dividends as well. And when they do both, I just love it. So we're going to be going over a couple buy and hold forever dividend stocks. And the first one I actually wanted to show you guys is ticker symbol POOL or pool. Now, these guys almost have a monopoly on the pool manufacturing industry. Almost all pools use their service in one way or another, or their products, and they actually have a dividend yield of 1.34%. But look at the actual stock price. Look how it's done. It's done pretty good. So I'm actually going to go and show you guys why. So obviously they're cash flow positive. Look at their net income. It is down year over year, but that's because consumer spending on their pools are probably down a little bit right now in this higher interest rate environment. But even still, this is super important. Look at their assets to liabilities ratios. This is my favorite part right here. Now, I got comments the other day saying like, yo, their assets are down from 1 year ago. Like, look at this. 1 year ago, they were 3.69. Now they're 3.43. And I'm like, dude, no, you don't look at that. You look at the actual ratio. It was 67%. Now it's 58%. So you now have more equity in the company, and it's down because that's cash they're using to pay down the liabilities. It's hard to understand to an extent, but it's very good when you see this ratio going down. But anyway, let me show you the number we actually want to look at, and this is the number right here. So $373 million in the most recent quarter. Look how much that is. That's crazy. So $373 million, and out of that, their dividend literally only cost them $43 million. So this is a dividend growth play. And not only that, let's go ahead and see how much stock they're buying back. So in the most recent quarter, they bought back $134 million of stock. Obviously they used to buy back a lot more, but you're getting a company here that constantly is buying back their own stock, and they're paying out dividends. And if we go to the total common shares outstanding, it's actually down from 1 year ago, obviously because they're buying back their own stock. But now let's check out the dividend growth on this one. So it went from, well, in 2020 it was 58 cents, now it's $1.10. And in the most recent raise, it was just $1. Went from $1 to $1.10, which is a 10% dividend increase. Imagine getting a 10% pay raise every single year. Obviously, the yield isn't high, but the growth is high with ticker symbol pool. So let me know your thoughts on this dividend stock, and let's actually get into the next one. All right, you guys. So the next dividend stock is actually a dividend king. So you get that 50 years of safety. So the dividend king is actually ticker symbol TGT or Target. Now, we've all heard of them, but look how the stock price has done over the past year. It has been absolutely crushed. As we know, Walmart is at all-time highs, very close to. Walmart's done better than Costco. A lot of people don't know that, which is crazy. Walmart's doing better than Costco. But anyway, Target's numbers aren't even that bad. They're not bad at all. And yet the stock price is like at the 2020 pandemic level. So let's actually look at the numbers. So Target's yielding 3.93% right now, its dividend yield. And real quick, guys, I forgot to mention this. Make sure you hit the like button if you're enjoying the video. And if you like how I break down all the numbers, I show you the numbers we actually want to look at here. But yeah, let's actually look at the numbers right here. So obviously net income positive, but here's their balance sheet. It's 77%. It's down 2% from 1 year ago, which is good to see. But the operating cash flow is what we want to look at for these grocery stores. So $2.13 billion in the most recent quarter. That seems to be about average. Looks like they used to make like 2 billion on average a quarter. But anyway, let's see how much their dividend cost from that. So their dividend literally only cost $499 million, so they can easily afford that. And if we go to their stock retirement program, they used to buy back a lot of stock. Look at this, like exactly a year ago, they bought back 2.64 billion. Now, I think they'll start resuming their stock buyback program once this high interest rate environment is over. But as we can see, they love to do these stock buybacks. And let's go. So if we go to their total common shares outstanding, it is up 0.3%. That's because they didn't buy back any in the most recent quarter. But they're trying to preserve their cash right now. Because if we look at their cash on hand, $1.62 billion, and their debt they have of $16 billion. And if we see their interest expenses, it's gone up quite a bit from 1 year ago. They're paying $141 million in interest, at least in the most recent quarter. So looks like they're trying to save their cash for paying off debt. So yeah, let me know your thoughts on Target. The dividend growth on this one's really good. They just rose the dividend from $1.08 to $1.10, and this one had some insane growth in 2020. It was 68 cents and went from 68 to over a dollar in just 2 years. So that's some insane dividend growth here with Target. So let me know your thoughts on this one. So yeah, that was Target. Let's get to the next dividend stock. And real quick, if you're wondering what app I'm using, it's called Webull. And if you don't have it and you want to get it, I'd appreciate if you use my affiliate code in the description. It'll give us both some free stocks. And yeah, let's just get to the next dividend stock. All right, guys. So the next dividend stock on the list is actually a REIT. And dividend investors love REITs because they have to, by law, pay out 90% of their taxable income in the form of dividends to the shareholder. So in our last video, we actually looked at ticker symbol GLPI, which is Gaming and Leisure Properties, and that's a direct competitor to VG Properties. And VG Properties is the stock we're actually looking at next. And if we look at it on a 1 year basis, it's basically flat from 1 year ago. But if we zoom out, it's actually up like crazy since 2020. And even at these high prices, the dividend yield is still 5.75%. So that's more than your money market funds. So it's very safe in my opinion. So let's actually dig into the numbers. So obviously they're making a lot of money with their triple net lease strategy. But let's go to their assets to liabilities ratio. So it's 42%. And for a REIT, that's very safe. Usually it's more than 50%. So for it to be 42%, that's really good. But we're going to look at the core FFO. So this right here is the core FFO, and this is what they pay out the dividend from. And in the most recent quarter, it was $552 million, up 9% from 1 year ago. So $552 million, and their dividend cost from that $382 million. So obviously they can easily afford that, and that's in line with the 90% rule they have to do. And if we go down here to the total common shares outstanding, you've only been diluted 5.58% from 1 year ago. So remember that. 5.58% in their assets are up from 37 billion to 42.8 billion. So yes, you've been diluted, but your assets have gone up like crazy as well, and that further supports the dividend for more dividend growth in the future. So looks like it's very safe. So let me know your thoughts on this REIT. Let me show you the actual dividend growth here because they just rose the dividend to 41.5 cents. And look at this, in 2020 it was 33 cents, and it looks like they raised it like 3 cents every quarter. So that's pretty cool to see. And I love the high yield on this one. So 5.75%. And they own some of the most famous properties on the Las Vegas strips that you've definitely heard of if you've, been there. And let's get into the next dividend stock. All right, guys. So let me show you the next dividend stock. So we all know VF Corp has not done well. They actually just announced earnings and they said they're doing a dividend cut. And we can see how the stock has performed. It is not good at all, but we're going to be looking at their superior brand, one that's doing a lot better, and that's actually ticker symbol NKE. Look how it's done since it reported earnings down here. It's absolutely gone crazy since $88 all the way up to over 100. So let's actually dig into the financials of this one. The dividend yield isn't crazy. It's like 1.4%, but let's actually look at the numbers. So net income 1.45 billion. Assets to liabilities ratio has stayed the same at 62%. So look, $1.45 billion. And how much does their dividend cost of that? Their dividend actually only costs $524 million. And if we go to their stock retirement program, this is crazy, all right? They're spending double their dividend on buying back their own stock. So they're buying back over $1 billion of their own stock every single quarter. And it used to be, look, $1.4 billion on that one quarter. But anyway, their market cap is $160 billion. So they're buying back like over 0.6% of their total common shares every single quarter. So that's crazy. So let me know your thoughts on Nike. I didn't even look at it that way. So if we go to their total common shares outstanding, you're down 2.56% from 1 year ago. And how much cash do they got? So they have $6.18 billion of cash. It is down from 1 year ago. That's still a lot of cash. And how much debt do they have? So they actually only have $8.94 billion of debt, and that's down 5% from 1 year ago. So that's really good earnings for Nike. I think that's why it's up in its most recent quarter. So yeah, I really like Nike. I think this brand will be here for the next 50 to 100 years. Let me know your thoughts on this one. And it's at a really good price right now. It's a little off this bottom right here, but it's at a decent price and you get the dividend growth. Oh, I forgot to look at the dividend growth. We'll look at that really quick. So in the most recent quarter, it was 34 cents. And hey, look, they're going to raise it next quarter. So next quarter, they're going to raise their dividend It looks like it used to be, in 2020, 24 cents, then 30, now 34. So the dividend growth is pretty good, but the stock buybacks are even better with Nike. So let me know your thoughts on this one. But yeah, guys, hope you enjoyed the video. Those were all my stocks for today. Don't forget to hit the like button before you go. It helps me out a ton. And subscribe if you haven't already for more dividend stock analysis and portfolio updates.